The people that invested their money at the Silicon Valley Bank were very risky tech startups. So what this does is it brings a few things up that you really want to consider to safeguard yourself from any issue like this happening to you and your family. So the recent failure of Silicon Valley Bank is the story that everyone is talking about. It has sent shockwaves throughout the financial world, and so many people are left wondering, what happened and how could this affect me? The collapse has raised a lot of questions about security of our finances. It's left consumers worried about the reliability and trustworthiness of their banks. And it highlights the importance of doing homework before really entrusting any financial institution with your hard-earned money. But here's the thing I want you to know, that this was an isolated incident. The people that invested their money at the Silicon Valley Bank were very risky tech startups, very rich multimillionaires. This is not your average, everyday, ordinary neighborhood bank. So what happened here isn't necessarily something that's easily going to happen at just your regular local bank that you bank with. But I think it's important because this is really one of these moments in times that we can take some lessons and really learn how this can affect us and what we can do to safeguard our own money. So what does this mean for us? What's it mean for you and your money? Here are a few tips that we can use this horrific disaster as reminders of what we need to do to safeguard our own money. Number one, using strong passwords. I know they're a massive pain because we can't remember them all the time, but creating a strong password is really critical in protecting your bank account. And it's also important to avoid using common words or phrases or using the same password across multiple accounts. Number two, having that two-step authentication on any account that you have. Again, I know this could be a huge pain and an inconvenience, but that inconvenience can actually save you. That two-step authentication will add that extra layer of security to your account in addition to the password. This could be a text, an email, or some biometric factor like your fingerprint. You always want to make sure that any financial data has a two-step verification on it to protect your accounts. Number three, monitor your account regularly. It's important to just keep an eye on your account. Make sure that you have notifications set up to your phone so that anytime there is a charge, a debit, a credit that's going on inside of your account, that you're going to get those notifications and understand what's going on. That's really important too when you set up, as you obviously heard, if you listen to this show or you've watched my content for any amount of time, you know that I always talk about the State of the Union meeting. If you haven't heard that before or you didn't read it in the book, I'll tell you what that is. Every single month, month after month, it's setting a financial date up with yourself, making sure that you're reviewing your balance sheet if you have a business, your P&Ls, your profit and loss, your income statement, and also your cash flow statement. This is going to give you a bird's eye view on anything that's going on inside of your business and all of your accounts. You also want to get your bank account reconciliations and a lot of the other documents if you have a CRM system or a POS system, all of that information so that you can review all of your financial data before there is an issue. Also, pay attention to your credit score. Use a credit monitoring service so that you can get alerted if there's any changes in your credit report, any suspicious activity. This can also help with identity theft. So often people are a victim of identity theft and they get cars, houses, all these purchases, credit cards taken out using their social security number. If you are using a credit score monitoring service, you'll be able to get notified should there ever be any odd activity going on with your accounts or using your social security number. The reason that everyone is up in arms about this, and one thing that you want to make sure that you understand, and this is something that I don't even think I knew until much later on in my business because I didn't actually have the income or the savings to even worry about it, but our federal government has a division called the FDIC. And what that does is if you have deposits in a bank that is less than $250,000, you have insurance from the federal government that money is insured. So if anything ever happens to the bank, if you have $225,000 in there or $249,000 in there, that money is insured. It's backed by the federal government. Where you go to risk is when you have more than that in any account. So if you have $275,000 in a Chase account and you have $500,000 in a Bank of America account, you've got some money at risk between those two financial institutions. So what this does is it brings a few things up that you really want to consider to safeguard yourself from any issue like this happening to you and your family. Number one, make sure that you diversify your funds. If you have multiple accounts, and make sure that you don't have anything more than $250,000 in one. Spread your funds across multiple banks, investment firms, whatever you need to do to reduce the risk of losing your money should there ever be a problem. And if you have more than $250,000 in one bank, and you have so many funds that you don't want to reduce that amount or you don't want to spread it out for any reason, consider purchasing private insurance to protect that amount just in case there is ever a bank failure or fraud. This will bridge the gap from where the FDIC stops and where your risk begins. Number three, always consult with a financial pro. If you have that much money sitting in an account, you are likely going to want to have different investment options so that you can start to invest your funds and not just have them sitting in an account. Other than your fallback fund, you don't want money sitting in a savings or a checking account or even a high yield savings account because they collect such low returns. All of these things that you do now will prevent you from having any other type of risk should something ever happen with your bank or your financial institution. Okay, guys, if you loved this episode, please give the show a follow on Apple Podcasts, and we would be so honored if you would leave a 5-star review sharing your biggest takeaway. And for more quick tips about building businesses, wealth, or anything like that it comes to money, please give me a follow on Instagram at Candy Valentino. Thanks so much for tuning in to Generation Wealth. We'll see you next time.